I think first of all, one has to think about why an allocation to Japan. It's the third largest economy in the world. It has a very, very large liquid equity market with over 3,000, in fact 3,500 companies that are listed. And it has usually about 100 new companies coming onto the market with initial public offerings each year.
In Japan, earnings expectations have come down quite significantly in the last 6 to 12 months, and valuations have as well. So I'm positioning selectively for recovery in certain sectors which have already turned down and will start to come up again in the second half of 2019. And I continue to focus on those consistent 3-year to 5-year runway of growth companies in the mid-cap space for alpha generation in the portfolio. And additionally, looking continuously with using our research team in Tokyo for the under-researched names in the market. And then finally, I continue to look for innovative and disruptive companies in the pre-IPO stage.
Nick is very, very good at stock selection. He's backed by 13 analysts in Fidelity in Tokyo. We have the largest presence of any foreign asset manager in that country, and he's adept at finding very, very interesting companies which are exhibiting very high rates of growth. So it's a great opportunity.
Looking at the 3-year numbers, which obviously I've been managing in that period of time, we see that the share price is up around, this is an annualized return, 3-year annualized return of 19% for the share price and about 15% or so for the NAV, and against a lower return for the index. And so I think that overall, with improved performance, some of that discount on the NAV has come down, and hopefully as we go forward, without our performance continuing, the NAV discount will come down more.
In the past it was overvalued. At the moment, very fairly valued, whether that's on a price to book basis, a price earnings ratio basis, and even now in terms of the dividend yield, which has come up a long way because Japanese companies are sitting on a lot of cash, they're paying out higher dividends, they're doing buybacks, and so it makes for a very, very interesting environment in which to invest.
So there are lots of sources of information. I would suggest the first port of call is the company's annual report, which is a very comprehensive document. You can download it from Fidelity's website, or you can have a paper copy sent to your home. I would also suggest looking at the Association of Investment Companies website, and indeed the Fidelity website for regular articles from Nicholas Price explaining his latest thinking and positioning.
Fidelity Japan Trust is available to buy through most retail investment platforms. Hargreaves Lansdown, Best Invest, Fidelity Personal Investing, AJ Bell, there's quite a number. You'll also find information about the trust on those websites, but importantly you can buy them in a number of different vehicles. So if you're saving for your pension, it might be a pension, a self-invested personal pension, or you might want to save in an ISA, or you might be wanting to save for children in something like a junior ISA, or indeed if you've used all your tax-efficient vehicles, it's also available in a general investment account.